Hey everyone, welcome back to the channel, your number one source for income-oriented investing. 2024 is right around the corner, and last week I released two videos, one specifically for Canadians or Canadian stock market, one for Americans or American stock market, where I give you three free sample portfolios, right? Income, growth, and dividend, three very popular styles of investing. But I figure I'd do a follow-up and really do something specifically for income investors now, because that's what this channel is all about, obviously. So one thing that is very hard to start as a newer investor, as a new income investor. There's a lot of covered call ETFs out there, a lot of providers, different strategies. It could be a little bit daunting. You do have that sample portfolio that I talked about last week, but today's video, I want to talk about something that I've been mentioning more and more: core positions, right? I talk about it when I unveil my portfolio unveil video. So I figure what I'll do is review all the covered call ETFs, and there's going to be a video for a Canadian market, one for US market as well. So make sure you're watching the right one. One is going to be for Canadian, on the Canadian stock market, one for American stock market. But don't forget, as Canadians, there's no 15% withholding tax in the RSP. So you should watch both videos if you're Canadian. But if you only invest on the American stock market, obviously you don't have to watch the Canadian one. So going back to what I was saying, so when you're building your portfolio, I think it's very important that you establish your core position. So what are core positions? Well, you could describe it or determine core positions for yourself however you want to, but my opinion here, I think your core positions should be really funds that are diversified, that have a lot of sectors, whether they cover the entire American stock market, Canadian market, or the whole world. They should be really diversified positions. And my premise behind, or when I say core positions, is it's something you can invest in all the time, no matter what, that it can never be wrong. So that's what I really mean by core position. So what we'll do in this video, and by the way, I will stick only with ETFs in this video, and I will only stick with equity or stocks in this ETF as well. So, I won't be talking about, for example, the US government bond covered call ETFs, although technically I guess you could consider them as a core position if you really like those. But I'm going to stick with equity or stocks here. And what I'll go through this video is what I feel are all the covered call ETFs or income oriented ETFs that can be considered core positions. Which ones you choose, which percentages, is really up to you. That's the beauty of do-it-yourself investing. I know it could be a little bit scary when you start, but it's actually fun. Have some fun with it, with experience, with time. You'll know exactly which ones are going to be your favorite core positions. But what I'll do is I'll go through all of them. So these are going to be the ETFs I consider core positions, which are going to be diversified. Let's go through them all one by one to really give you some building blocks or some help to really start building your income portfolio. If you want to be an income investor like me, you got to establish these core positions. So let's go through them all right now. All right, everyone, let's go through what I feel are some of the top income-oriented funds on the US market. And listen, guys, there's no way I'm going to be covering all of them. I already know I'm going to get comments. What about this one? What about this one? I'm really going to be focusing on the more popular covered call ETFs that are index-based. I really like indexes. And on the US market, most of them are actually index-based because it's a very, very popular way of investing. And honestly, the US has the two best indexes of all time, the S&P 500 and the Nasdaq 100. And what better way to start with all the S&P 500 covered call ETFs, or several of them. Then we'll do the Nasdaq ones as well. So let's get started with the biggest, most popular, the king of kings, JEPI. JEPI is by far the most popular covered call ETF on the US market with over 30 billion of AUM. So I have detailed videos on a lot of these ETFs, by the way, guys. So I'm going to not going to go into detail here, but the best way to, if you want to do more research on one, is not only to check out the fund's website, obviously, but if you go on, the home page of my channel here, and you see this little magnifying glass, just put in the stock symbol of something you're interested in, hit enter, and you'll actually get all the videos that have that stock symbol in the title, right? And I do have a lot of Q&As with a lot of the fund managers like JP Morgan. I think, Hamilton Rayner is the guy who, the main portfolio manager of JEPI and JEPQ, which we're going to cover. I think he's only ever done a Q&A on our channel, which is fantastic. That's just an example. Same thing for the Defiance ETFs. I interviewed Sylvia, the CEO of SPY. I talked to Troy, the CEO of the company, right? Global X I talked to as well. So just want to, also simplify ETF. So make sure to check out, do a search for those videos on my channel to get the Q&As and more detailed information or detailed videos about these funds. This one, I'm going through them quickly. So JEPI is really your S&P, and what we're going to do is start with the S&P 500 ones. It's really an S&P 500 covered call ETF. One thing about JEPI, though, it doesn't have all the S&P 500. It only has about 100 stocks, 120 stocks in there, right? If you click on portfolio here, you'll see that the number of holdings is 132. So it doesn't have all 500 companies. But it has, the important ones. And what I think they do is really try to select the more defensive companies, by the way, on the S&P 500. So this is a really nice conservative way to get exposure to some of the best stocks on the S&P 500 with covered calls, 30 billion in AUM, very low management fee, 35 basis points. And the yield will change. All of these have monthly distributions, by the way. So you will see the monthly distributions here. They will vary based on volatility, mostly, and other factors, but you could expect about, on average, I would say 7 to 9% yield on average annually. And that's pretty much what actually I think Hamilton said in the Q&A. So JEPI, it's very popular for a reason, guys. Monthly income, nice yield, S&P 500 exposure. Now, the next one is one that I've discovered very recently, and it's not very well known. And it looks like they're really trying to compete with JEPI. It's from Goldman Sachs. So obviously, JP Morgan, number one bank in the US, Goldman Sachs, it's in the top 5. So it's a big competitor. There's GPIX. So GPIX, and I'm going to do a review video of ETF review video of this one. They also have GPIC on the Nasdaq, which we'll see in a second. So this is pretty much, listen guys, very, very similar to what JEPI does. The two main, covered calls on the S&P 500. The two biggest difference I see so far is that the management fee is actually a little bit lower, right? You see that the net is 29 basis points. I have a feeling this is a promotion. Maybe it'll go back to 35 basis points. Just the fact that it has the same gross expense ratio as JEPI, you could tell that they're really competing. All right, so this just came out in October or something. It's just a couple of months old, and that's the one main difference that I see so far. So obviously it's going to have less AUM because it's newer. But another big difference I see compared to JEPI is it looks like GPIX actually has all 500 stocks. It actually has all the S&P 500, whereas JEPI does not. So the first distribution or two just came out. Looks like it's going to be about 9, very similar yield to JEPI. Time will tell. I'll do a review on this one. So here's another S&P 500 style covered call ETF, which you could consider as a core position. Next one is SPY-I, another S&P 500 covered call ETF with a little bit high yield. This one works a little bit different. Check out my channel. I interview the guy who manages this. More or less, you're going to get approximately 12% yield or 1% yield a month. Very, very nice and consistent distributions. Very nice performance as well. This has only been out for less than a year, I believe. It came out in 2020. It's a little over a year. It's doing actually really well. I think it's outperforming JEPI, by the way. But again, another good core position as an income investor to have, S&P 500. You also have JEPY, which kind of sounds like JEPI because, everyone's trying to compete with JEPI. That's how powerful and strong JEPI is. This is from Defiance. This is actually the one I own, the one I went all in on, my wife's RSP account. I love this one. It's literally all the S&P 500, but it's daily options. So they do in the money puts, which is pretty much identical or exactly the same as out of the money calls. So I consider this really, you could consider it a covered call strategy as well. So it works the same way. It's the same risks, right? All the risks of a covered call strategy ETF is the underlying. So what is the risk of JEPI? What is the risk of SPY-I, of this one, of this one? The risk is the S&P 500, guys. Simple as that. So JEPY is the one I like. It has the most yield. Daily options instead of monthly or weekly. That's the main difference. So again, I have videos on this one. Make sure to check it out. Very, very interesting one here. Next one, still kind of on the S&P 500, is ETFs, another very popular one from Amplify ETFs. This one's going to have the lowest yield, and it's even less stocks than JEPI. So this is no way, it only has 35 stocks. Expense ratio is 55 basis points. The yield is low, though it's under 5%. So if I kind of consider this one almost more of a dividend growth strategy because they are going after more dividend. Like you could see here, dividend oriented stocks, and they do covered calls on individual stocks. But if you have a yield of only 4.8, they're not doing much covered call. So this is kind of almost not really an income one, I guess you could consider it, but more of a growth one or a defensive S&P 500, if you will. But I just had to mention it because it's very popular, and I guess you could consider it income oriented. Last but not least is XYLD, the Global X S&P covered call ETF, which basically does at the money covered calls on the whole thing. So basically you're giving up the entire upside of the S&P 500 for the biggest premium. And unfortunately, I think, the JEPI, the SPY, the JPY, when it comes to the strategy, I think Global X, this strategy that they do in all their Ds, QYLD, RYLD, XYLD, which we'll see a little bit later, is kind of outdated. I think it's, the other strategies are a bit better. The yields, it's going to depend monthly based on the volatility of the S&P 500. So when volatility is low, you could actually get some very low distributions, which is, pretty sad. But you can see the last one, the yield is only 8. So, in my opinion, I'm going to have a video on this, or maybe it'll come out by the time you see this video. I think Global X covered call strategy needs an update. That's all I'm going to say. But hey, if I think QYLD, RYLD, XYLD, they're really designed for people who are super pessimistic. They think the market is never going to go up. So you're willing to forfeit all the market upside. So another way to look at it, I feel, is kind of like you're literally shorting the S&P 500 or the Nasdaq 100 with QYLD, the Russell 2000 with RYLD. You're really, really, really pessimistic. You're willing to give up all the upside. And hey, maybe that's your thing. Maybe you feel that way. That's fine. You could use it tactically as well. If you feel, I think the S&P 500 is not going to do anything or go down in the next year, or something like XYLD is probably what you're going to want to own, right? Because you feel like there is no upside and this gives up all the upside. Makes sense? So 1, 2, 3, 4, 5, 6 S&P 500 style covered call ETFs all have the same risk, right? Mostly the S&P 500, except for IDVO and JEPI. It's not the entire S&P 500, but which one you choose, it's up to you. But hey, the S&P 500 is always going to could be pretty much not only a core building block of your portfolio, but if you want, you could just have that and that's it. Next, we'll go through the Nasdaq 100 index-based covered call ETF. So Nasdaq 100 is basically top 100 stocks on the Nasdaq, no financial. So it's going to be much more tech focused. Nasdaq's a little bit more volatile, so you're going to expect a little bit higher yields as well than the S&P 500 ones. JEPQ, literally JEPI's brother, does the same strategy, same thing, same management fee, monthly distributions, but it's on the Nasdaq 100. Not the whole Nasdaq 100 again. You see that 90 stocks, not 100. It's probably about 80 stocks, something like that, of the Nasdaq 100. But the yields are going to be a little bit higher. So you're going to expect, I would say, between 10 and 12% yield, a little bit higher yield than JEPI. Sorry, I'm here. With varying monthly distributions, but you could see that, fairly consistent. But, sometimes when volatility goes down, you'll see smaller distributions, or when volatility is very high, you'll see high distributions, right? It really, really depends. And GPIC is literally GPIC's brother. Same thing from Goldman Sachs, except it's on the Nasdaq 100. So again, very, very similar to what JEPQ does, except it seems like it's all the Nasdaq 100. And it has a little bit less fee for now, 6 basis points less. QQQY, same thing that JPY does, except on the Nasdaq 100. This is what I own in my RSP. I went all in on this. Is my core position in my RSP, and this is core position in my wife's RSP. This is just because they're my favorite doesn't mean they're going to be the best or whatever, right? It's really up to you to decide which one is is best for you, but definitely going to be the highest yield. But if they're giving out so much, don't forget, guys, that if you're getting a humongous distribution, everyone, that comes out of the NAV. So my estimate with JPY and QQQY is you slowly see a declining NAV. That is why I am doing the drip game with them. I'm just dripping all my units for QQQY and JEPY. So QQQY, the Nasdaq version, right, from Defiance ETFs, and you have QYLD, which is basically, same thing as XYLD, but on the Nasdaq 100. QYLD is actually the OG. I think it's came out like 9 years ago, and it's been pretty much the most popular one, covered call income-oriented ETF. But JEPQ actually recently just passed it in terms of assets. I'm going to do a video talking about QYLD in detail, guys, but Like I said earlier, you only get QYLD, XYLD, RYLD if you're the ultimate pessimistic person and you think that the Nasdaq's never going to go up. But if you look at the performance, if you do, for example, QYLD versus JEPQ, and we could do that now with the Dividend Channel app here where you could compare two stock symbols, it's not even close. JEPQ is beating it because, you know, if the Nasdaq goes up, which it tends to go up over time a lot because it's technology stocks, QYLD gives up all that upside, JEPQ doesn't, right? So sorry about that. So yeah, of course, JEPQ is beating QYLD, and I think that's, in terms of performance, that's going to continue in the future. So yeah, you could compare any one of these, by the way, using this tool. So moving on now. So we covered S&P 500, we covered Nasdaq 100. My opinion, the two best indexes in the world, the two best indexes to get your overall American exposure, and the big stocks, the big cap companies in America. But there's also a lesser known index called the Russell 2000. And there's IWMI that just came out from Defiance. Same strategy, same exact thing as JPY, QQQY, but it's on the Russell 2000 index. And then you have RYLD, which is the Global X1. So these are the two right now that are out for the covered calls on the Russell 2000. Russell 2000 is an index that covers 2,000 smaller companies on the US market. So if you want added diversification, you want some small companies, small cap exposure, you could consider these two. Personally, I'm okay. You don't even need them, right? I don't have these. You could just stick with the big boys, right? The Nasdaq ones, the S&P 500. But hey, might not be a bad idea to get some added diversification if you want. Moving on, there's also IDVO, which is kind of like a brother to DVO. This is actually one of the only covered call ETFs that focuses on stocks outside of America. There's not many of them, but you could consider IDVO. This is going to be stocks outside of the US, dividend stocks with some covered calls, and the yield is actually a little bit higher than DVO here, right? Let's see the management fee, 55. I'm assuming it's probably the same or a little bit more. Yeah, 65 because it's external stock. So IDVO is actually an option if you want some international exposure, guys. I wanted to give you that option here. Now, the next ones are two that I really, really love, and I've been really contemplating, should SVOL be in this video? Should it be considered a core position? And I'm comfortable enough now that it has a good track record, that I understand how it works, to say yes. I think SVOL is so freaking good that I think it could actually be considered as a core position and an income portfolio. So SVOL is the simplified volatility premium ETF. You're looking at a yield of about 15%. They have a unique strategy where it's a little bit, you read it, you'll probably be lost, but it's actually a lot simpler than you think. Again, go to my channel. If you just search SVOL, you will see the videos. And the latest one that just came out 2 weeks ago is I review with the fund manager, the actual guy who invented SVOL, how SVOL works, and a strategy update. So I know there's a lot of YouTubers that are saying all kinds of nonsense about SVOL because now they added the AGGH ETF in there and that it's riskier and now there's return of capital. It's all a bunch of nonsense. The truth is, watch that video, SVOL is actually safer now, if you could believe it. So this is why I always try to get the fund managers to come and talk on my channel, guys, so I give you the right information. Don't just believe some random person, even if they're pretty. That's all I have to say. So SVOL is awesome. It's been around for a few years now. Very, very consistent monthly distributions. 30 cents a month now, which translates to about 16% yield. And look at the fund. It's growing very, very rapidly, very liquid. So SVOL, I love it. I own about 60,000 of it myself. It's in my dad's retirement account. I think SVOL is awesome, and I think it could be considered a core position. High, think of it like even a less risky version of SVOL. So high, it's a very, very simple strategy. You'll get about 9% yield. And if you look at the stock chart, it barely moves. So high, I feel, could be a core position in an income portfolio. If you're more of a conservative income investor, I think high could be a really good fit. And again, check out the video because we talk about high as well in the video with the people who actually management. So not only this guy was on, but also Shailesh was on as well. So those are really 15, or I believe it's 15 ETFs. And I'm sure there's a lot more of them. There's many closed-end funds. I've decided to stick with only ETFs here in this video. that I feel are really could be core building blocks or core position in an income portfolio. I own some of these myself. I decided to go with JPY and QQQY as my primary index positions and SVOL as my primary secondary position, guys. But that's just me. I think all of these are, with time, are going to have very similar performance and similar exposure, right? S&P 500, Nasdaq 100. Again, you could use the total return comparison tool here to compare some of them. Just make sure you're comparing potatoes with potatoes, right? You don't want to compare, for example, JEPI with JEPQ. It's like S&P 500, Nasdaq. You want to compare JEPI with this one and SPY and JPY, right? So compare apples to apples. And don't just say, well, this one is performing better, so I'll just go with that one. Do a little bit more research, dig deep, and really figure out what strategy fund manager you like best. So hopefully this video was informative for you. I'm thinking of doing this maybe every year, every December, every year, just to update, because I know more and more core style income ETFs are going to come out. So we could review them, give you an update on them. And again, I review pretty much almost all these ETFs in detail on my channel, so you could do a search and get the detailed videos where I do more of a deep dive. So thanks for watching, guys. Really, really appreciate it, and see you next time. Hey, don't go yet. A few reminders before you leave. Did you know that I launched a YouTube loyalty membership program where for only $3 a month, you could become a PII Inner Circle member, where you will gain access to exclusive content, exclusive videos and live streams, as well as other perks and benefits, including a really cool weekly opportunity report. That's right. If you're interested, just click on the little join button next to the subscribe button to see what it's all about. Also, make sure to follow me on Blossom and download Blossom. It's a social investing app, which is really cool. You could share your portfolio, follow other people's portfolios, including my own. My username is Adrian_PII. So download it with the referral link below. Not only is it free, but you could actually earn cash by taking these really small, quick 1-minute courses. Really awesome. It's a no-brainer. Also, make sure to visit our website, passiveincomeinvesting.ca. That's where you could book a one-on-one private coaching session with yours truly, with myself, where you could ask me all the questions you want. All the information and booking information is on the website. Make sure to check out that video on the homepage there to see how to book a one-on-one properly. Also on my website, you could purchase my digital product, which I'm very proud of, the ultimate DIY investing package. This is a reference tool or a companion tool that will help you build your own portfolio. So it has lists of funds, it has sample portfolios, and it covers both the Canadian and US stock markets. And the good news is you'll only ever have to buy it once, because it comes with free lifetime updates. And my plan is really to update the version every single year. So make sure to pick it up. Also, I have Questrade and Passive referral links below. So Questrade is the broker that I personally use, and Passive is the broker companion tool or assistant that I use. Really cool program, really cool software. So I have referral links for both of those. Questrade, $50 of free trades. And Passive, I have half off for the elite membership. If you're interested in the elite membership, and even if you want to start out with the free membership and upgrade to the elite afterwards, use my referral code so you could still get that 50% off. And don't forget that the elite membership of Passive is 100% free if you use Questrade. For social media, we have a very successful and big Facebook group, private Facebook group with over 14,000 members, where we all try to help each other out. So make sure to join that group. Information is below. We also have Instagram, where you could follow us, or more personal stuff when it comes to our life here in Panama. And there's LinkedIn as well. So as usual, everyone, how do I leave you? Continue to stay safe, stay healthy, and of course, stay passive. See you next time.